a circle, which is the universal set of my comfort zone, and then the magic happens in an entirely different area outside of that. Because usually when you're running a business, the present is broken and the future is the optimistic. Right. So you're always trying to fix everything now that doesn't work in the hope of going there. That secular trend change, if it functions around commercial things where money is involved, the outcome will be wealth.
Most investors get it completely wrong. They focus on today, not the future. But Raoul Pal reveals why this mindset could cost you everything. He explains how to spot trends before they explode, why people resist change, and the massive opportunities ahead. Stay tuned. This could change how you invest forever.
So the world of macro investing is a world where you live in the future and figure out what is the probability of the world going there. Sometimes there's a lot of probabilistic outcomes, and other times there's like two. It's pretty binary. So that is the key thing to learn, is to figure out what is the state of the world in 6 months or 12 months forward, not today. Or if you're looking at big secular trends, what is the trend in the next 10 years, not today's trend? For example, if you were to look at today's trends, you might say the Indian economy is sluggish and not that exciting, filled with bureaucracy. When you look at the secular trend, you say average age of 28, growing as one of the fastest growing economies in the world over time, low debt, and a massive Cambrian explosion in technology. So therefore, is that likely to be better in the future than it is today? And again, we'd ask ourselves questions with today. Is inflation going to be here forever, which is becoming the narrative? So what I tend to do is question market narratives. That's the contrarianism versus the work that I do. So I don't just question it for the sake of questioning it. I do it and say, for inflation to be here in a year's time, what would have to be true? We would have to see all prices continue to rise at 9% over the next year or two. Is that probable? Well, not if we have a recession. So therefore, what is the most likely outcome for inflation? Lower. Then the question is by how much? And that's when you start doing other work. So it's many people just look at the state of the world today and say, yeah, it's screwed. And they don't look forward to say, okay, what will it look like in 12 months' time? If you build a business, you actually automatically are forced to look into the future because you have to try and get to a future state and you have to affect that change. With financial markets, you can't affect the change. Many people make the mistake of saying, I wish it to be so, and therefore I'll want it. I wish the Federal Reserve didn't exist. Well, they do. So you have to understand, how do they work? And that's much like the Neolithic man hunting. You need to understand the beast that you're dealing with and how it operates. So I just think many people aren't taught that skill, and you learn it. And I learned it by observing others. I was lucky enough to be in a position where I was working at Goldman Sachs and I would be speaking to the world's most famous investors. I remember seeing how they didn't operate in the present, they operated in the future and would be joining the dots with their investment. If this happens, then this happens, then this happened. And that third step is where they made all the money. It's only when everything goes to that moment of the correlation of one do they care about the present. That's when you put on maximum risk or whatever it is. You know, those famous George Soros moments. But those are rare. Most of the time you're having to live out in the future instead. A lot of the world is cyclical, and we're trained to believe in cyclicality and linear thinking. Now, what's incredible is economists are linear. They write models. The models do not represent the real world, because if you show a small child a chart of GDP, it goes up and down in a cycle. We know the economy is cyclical, yet economists build a steady state model, right? So we know that's wrong. But then many of us understand cyclicality, booms and busts, and that becomes law to us. But it's not law. It's law to some things. Exponentiality is something that you see most often in technology, viruses and other stuff. And at this point, you have to understand trend rates of growth, and is this cyclical or not cyclical? Is the adoption of AI cyclical or not? Anybody will tell you it's not. It's a secular trend change. So therefore, why would you want to short companies are involved in this business? You should be biased only towards buying them. Now, whether at what value and what price, okay, that's a market timing issue. But you know you're armed with exponential growth. And people don't see that because they fear it. Because if I say to you, oh, well, AI is about to go exponential, as are the robot, the first thing that happens to you is fear. It's like, what the fuck does this mean to me? Right? So you start now clouding it with emotion. And it's like, I don't want that. I don't believe in this world. I want to go back to the Mustang and the days of gasoline and, you know, where we would go to the ball game with our hot dogs, whatever it is, right? Whatever you anchor onto the past for safety. So people really fear change because change is unknown. So how you have to deal with it is embrace it. If you know there's a secular trend change, then embrace it. Because then is where the magic happens. All the magic happens outside of your comfort zone, never in your comfort zone. So there's a circle, which is the universal set of my comfort zone, and then the magic happens in an entirely different area outside of that. And it's the same with investing, it's the same with life in general, is you need to be out of your comfort zone and understanding it's okay not to know, but to embrace.
Raoul Pal breaks down the secret to investing successfully, thinking ahead. He explains why most people get trapped in the present, failing to recognize long-term trends. He talks about the power of questioning market narratives, like inflation fears, and why real investors look beyond current events. He also dives into human psychology, showing why fear holds people back from embracing exponential changes like AI, crypto, and blockchain. If you're serious about building wealth, you can't afford to miss what's coming next. Keep watching.
The hard thing is living in both the present and the future, because usually when you're running a business, the present is broken and the future is the optimistic part.
Right.
So you're always trying to fix everything now that doesn't work in the hope of going there. That dichotomy in your head at all times is really, really hard. It's soul destroying because all you can see is everything broken and periodic moments where everything's working magically, but you know where you want to get to and where you can get to. That is so hard. And the other founder to CEO is then people. You know, you hear this all the time. Managing people is not easy. And there's different ways different people approach it. I try and approach it via kind of vision and empathy. So getting people bought in on where you're going allows you to coalesce a large group of people at the same time to go in the same direction. And you need to be empathetic to them and their own personal story. But different people do it in different ways. You know, if I'd have been better at being process driven, I would have put more processes in. You'd never realize that as a founder. You don't think about processes. They're like, oh, they're for other people.
Sounds so unsexy,
they're for airline
right?
pilots. Yeah, but fuck, if you don't put processes in, you've got a mess. And everybody goes through this. And then you realize you've got a mess and you try and figure out the mess and you fix things and you don't fix the processes that cause the mess. So there's so many lessons to learn. I mean, it's, you know, again, you hear this all the time. It's endless failure because you just don't know what you're doing. That is the advice. Find the secular trend. Do not go into the oil and gas industry. You might get paid well now, but your opportunities diminish over time. Do not go into mean reverting industries. Go into exponential industries. Go where the tailwind is. That secular trend change, if it functions around commercial things where money is involved, the outcome will be wealth. Fast-growing industry that generates revenue, you being involved in that will generate wealth. It's as simple as that. Not a complicated equation. So you just need to do that. Now, what does that mean with the rise of AI, you know, and when you're competing against machines? I don't know the answers, but data is one thing. Community, Web3, crypto, blockchain technology, that's another. Being involved in the application layer of AI, robotics, Internet of Things, the space industry, these things are all exponential industries, and they're all going to generate obscene amounts of money to do that. What people are doing is making a fundamental mistake of not understanding risk versus reward. You have time is all you have, and you lose it every day. You are going to invest your time and your energy in something that needs to have a particular outcome. If you over-diversified in your attention, what you have is no risk. Without risk, you don't have reward. It's a simple formula. So you need to take calculated risk. So you may survey the landscape, but you need to assess the probabilities of success. And then you focus on what gives you the highest potential risk reward. Now, it doesn't have to be one thing, it can be a few things, but that's anybody who's not focusing is risk averse. That's the problem. And if you're not focusing, you will not succeed. Probabilistically, you will be unlikely to succeed because you are not taking a bet. How can you win if you don't take a bet? The world just doesn't take you there just because you get swept along with humanity. You know, GDP growth, you know, is like 2% a year. So maybe you grow by 2% a year. Well, that's shit. If you want to grow better than GDP, you're going to have to apply your own time and your own intelligence for an outcome that solves for better than 2% a year.
The biggest mistake investors make? Ignoring the future. Raoul Pal just showed us why spotting exponential trends early is the key to success. If you're still focused on the present, you're already behind. What's your biggest takeaway from Raoul's insights? Let us know in the comments. And if you want more expert interviews like this, hit that subscribe button. See you in the next one.